So friends, this is the story of GST in India. As I told you that in year 2000, late Atal Bihari Vajpayee ji talked about GST first time in the parliament, and then journey start for GST in India, and slowly, step by step, we took 17 years to make GST a reality. Many papers were consulted, many officials were consulted, many trainings was undertaken by the officers, policymakers across globe for better practices, best practices of GST adopted by countries so far. And finally, in 2017, 1st July 2017, GST came into picture. After a lot of debate in Parliament, amongst policymakers, consultation with industry chambers, and other stakeholders, India adopted, based upon their federal structure, dual model of GST. And this dual model of GST is comprising of central GST, state GST, and IGST. We will discuss in following slides all these terminology related with GST. But yes, with effect from 1st July 2017, GST was placed in the country. So friends, the GST that we adopted, how it was, what types, or what characters, or what features it has, that are very important to know. So first feature of GST that we have adopted, that is dual model of GST that we have adopted, is a destination based tax. It is a basic character of GST which made many states worried about that when they will adopt GST, their revenue will be gone. It was a worry among the minds of the state policy holders. So what is this GST, a destination based consumption tax? What is that? So we have to understand it, because this is the main foundation of GST. In previous slides, I talked about elimination of cascading effects of taxes. That was one concept that GST brought into the country, and it is another concept, that is GST is a consumption based tax or destination based tax. It means what? Friends, in pre-GST regime, when we are selling any product, let's take example, a cycle manufacturer in Punjab manufacturing cycles and sending the consignments of cycles or selling cycles across India. So if the manufacturer of cycle in Punjab send a consignment of 1 lakh rupees to Maharashtra, while raising invoice or while raising bill to Maharashtra buyer, what it will do? It will charge excise duty on these cycles and also sales tax. How it will work? On 1 lakh rupees of cycles, let's take example that excise duty is 10%. So we will charge 10,000 rupees excise duty. The value comes to 1,10,000 rupees. And on this 1,10,000 rupees, he will charge sale tax. It is in pre-GST regime, when GST was not there. So we will calculate sales tax. Let's take example again that it is 10% of the value. So 10% sale tax on 1,10,000 rupees, that is 11,000 rupees. So cycle consignment value is 1,21,000 rupees. And in this transaction, 10,000 rupees excise duty will go to central government and 11,000 rupees sales tax will go to Punjab government, because sale is undertaken by Punjab. Originating state is Punjab. So revenue will go to Punjab, because sale is taken place from Punjab. So revenue is of Punjab and it is Punjab government revenue. So under VAT, governments, means state governments, structure their sales tax rates as per their requirement. Sometimes on cycle it may be 10%, sometimes it may be 8%, it may be 12% also, or even 15% also. So they get changed from time to time as per their requirement. But in GST, again GST changed this concept. And now GST says that sale tax of 11,000 rupees, which has reduced now to 10,000 rupees during GST regime, because now GST will be charged on same value, that is basic value of 1 lakh rupees. So sale tax is of 10,000 rupees, that is state GST. So this state GST, that is 10,000 rupees, is not belong to Punjab. Under GST, 10,000 rupees state GST is now not belongs to Punjab. It goes to Maharashtra, where the actual consumption of cycles took place. Where the actual consumption of GST will go to Maharashtra. Means because say the cycles have been sold to Maharashtra dealer and Maharashtra dealer has sold these cycles in Maharashtra itself. So consumption of the cycles took place in Maharashtra only. That is why the revenue of these 10,000 rupees will of Maharashtra, not of Punjab. That is why we said GST is a destination-based consumption tax. Revenue is of the government where the consumption will take place. Where the consumption will take place. So in this scenario, Punjab was worried about his loss of revenue. That is why Punjab was opposing GST. And same was the case with Haryana also, because there are some items, the products for these states, they have royalty sort of thing, they have their own expertise. Because in case of wheat and paddy, we all know that Punjab and Haryana produces almost 40-45% of grains for the country. So same principle is applicable there also. When they were producing wheat and paddy and sending it to the across the India, they were losing their revenue. So it was a major impact on their business, on their budget. And they were worried about this with this type of model of GST. And that is why these are the some reasons that we took 17 years to implement GST in the country. So friends, with some plus and minus, it was made sure to all states in the country that they will not lose their revenue when GST will come. They were compensated, or the policies or the transactions were plugged in such a way that states should not have any revenue loss. And if it is there any loss, then a fund was created to compensate all states for their losses. That provision was there when GST was discussed and brought into the picture. So friends, GST is a destination-based consumption tax, means where the product will be consumed finally, where the services will be consumed finally, the revenue will be of that state, apart from whatever is gone to the central government. What it says further, it says GST is a value-added tax levied on both goods and services. So GST is such a tax, indirect tax, which is applicable on each and every goods and services except on the services or the goods which are exempted from GST. So there is some category of exempted goods under GST, and GST is not applicable on these products or services, but rest of the GST products and services all will be subject to GST. But still, apart from exempted goods, there are some goods which have been kept outside the purview of GST, like petrol, diesel, electricity. Though electricity is exempted item under GST, but revenue of electricity generation, that is excise duty, which is known as electricity duty, is a revenue of state government. So there are few products which has been kept outside the purview of GST, as I told you: diesel, petrol, aviation oil, real estate. These are kept outside the purview of GST. Others are covered under GST, though they are exempt, so they may be exempted. Similarly, friends, GST has eliminated many taxes. We will see the list of the taxes which have been subsumed under GST. We have adopted a dual model of GST where CGST and SGST is charged, and for interstate transaction IGST is charged. And GST is sum up of state GST and central GST, means whatever the rate will be applicable on any product, 50% will be GST for state and 50% GST will be for state central governments. So it is 50-50. So these type of things we have adopted under GST. So whenever GST is collected from interstate transactions, central government agencies will play a role of clearinghouse mechanism, and where the consumption has finally took place, that revenue will be transferred to such states. So if a transaction starts from Punjab to Maharashtra, the Maharashtra dealer who has sold these cycles will not deposit this amount to Punjab government now, but it will deposit amount with bank with central government account. And from that account, the amount of or the share of state GST will be transferred to state government, and share of central government will be transferred to central government. So this mechanism is very well working properly with periodical reconciliations, and each and every states are getting their share well in time, so that their budget should not be hampered. So this way, the IGST, CGST and state GST are monitored, and everyone getting their share, accurate share with main calculations, reconciliations, and well in time. Here I have listed out the items or the taxes which were there in pre-GST regime, but now have been subsumed under GST. So when we are talking about state government taxes or the central government taxes, in central government, I told you that we were having central excise, additional excise duty, service tax, countervailing duty CVD, surcharge and cesses, excise duty on tobacco and tobacco products, like this. So all these taxes are now submerged with GST. So instead of reading or instead of charging all these taxes, means central excise tax or AED, additional excise duty, service tax, countervailing duty, special additional duty, these all have been merged into the GST only. So instead of charging all these taxes wherever they are applicable in pre-GST regime, now we will charge only central GST, that's all. Similarly, in state GST, when we were charging VAT, entertainment tax, luxury tax, taxes on lottery, surcharge, octroi, etc. Now in GST, we are not charging all these taxes. So we are only charging state GST. Because when we were charging all these taxes, we were supposed to deposit in respective departments or in respective accounts of the state government. Sometimes it made things complicated, but now with state GST, that's all, we have to deposit in single account. Friends, stamp duty, passenger tax, road tax, electricity duty, these have been kept outside the purview of GST as far as state governments are concerned. So real estate is not under the GST purview. Partially it is there. We will discuss again how it is covered under GST and how it is not covered under GST. So these taxes are kept outside the purview of GST. Purchase tax, it is nothing but a reverse charge mechanism of tax collection. It was there in VAT regime, again is merged with the state GST. So all these taxes have been merged into GST, and the things has made simple. So friends, how GST is better than the previous regime of GST? Very simple. Dual model of GST, that is CGST, SGST and IGST we have adopted. It has eliminated cascading effects of taxes, as I told you. CGST, SGST is charged on same price. Earlier we were having different prices. Set of relief is a concept of ITC, input tax credit, we will discuss later on, is there, which has a great importance under GST. Destination based tax, we all know. Free movements of goods throughout the country. Earlier what happened? When GST was not there, suppose a truck is moving from Chennai to Delhi, it is supposed to cross 10, 12 states. On every state border, this truck was checked for different purposes, and sometimes it has to wait for days, and only then we could pass through the state boundaries. So normally truck was taking 30-35 days to reach Delhi from Chennai. But now, after abolishing of octroys or nakas or such checking at borders of the states, the truck movement time has reduced to 24-25 days. So means it has increased the transportation capacity of trucks. This impact has given by the GST. So with small corrections, GST has boosted the economy. So friends, our GST model is good enough to deal with each and every economy aspects and help the industry to grow. At the same time, it helps the consumer to buy goods at lower rates, as I explained you in my previous slides. So friends, these are some more benefits of GST which we have adopted, though it is not free from all shortcomings what we were having earlier, but still we are better off by adopting GST with effect of 1st July 2017. Friends, one question comes, if we have flawless GST, whatever we have adopted so far? The answer is no. Answer is no. We have not adopted the 100% foolproof GST. Why? Why I am saying so? Because if we go by this first point, it says the base should be extended to all goods and services, including immovable property, petroleum products, etc. It means what? I told you that GST doesn't cover each and every product. It doesn't cover petroleum products, it doesn't cover real estate. So means because of GST, whatever benefits we have derived, these benefits are not available to real estate sector, to petroleum sector. So if we go by the size of the economy, we can say that approximately 40% of the economy is still outside the purview of GST. So if it is so, it has different impact on the economy, on the products, on the consumers. So because immovable property or the petroleum products are kept outside the purview of GST, it is not good for the economy or the consumer, and it is not a flawless GST. We must have implication, we must have GST on each and every product. Economy will boom further. Then further, there should be a single low rate. There was assumption, there was a say during pre-GST regime that when GST will come, there will be a single rate of tax. But it is not like that. In this GST, we have 5-6 slabs. Means we have 3% GST, we have a slab of 5% GST, we have slab of 12% GST, we have 18% GST, we have 28% GST rate, and also cess on different products at different rates. So there are multi-level GST rates are there, whereas the basic spirit of the law was that we must have one rate of tax. which is not there. An input tax credit is also not available for each and every inputs. It's a major flaw or major shock for the industry. Though we have zero rated export, but still the mechanism adopted in the GST, our exports sometimes are not fully tax free, which makes our product not viable in international market. For small traders also, it's not good that GST is doing well for these small traders, because when we were having excise duty and all, the threshold limit was on higher side, whereas in GST threshold limit is 20 lakh rupees. So any businessman, any business entity having turnover more than 20 lakh rupees, they are supposed to get registered under GST. And friends, working other way around, if I say if any person who is having turnover around 25 lakh rupees a year, if he is a trader, how much he will save out of this 25 lakh rupees of turnover? To my mind, if we take 10% only as a margin, he will be having 2.5 lakh rupees. And if any dealer having turnover of 50 lakh rupees a year, if his margin is 10% average, so his earning will be 5 lakh rupees a year. So at this income from a business, it is very difficult for a person to comply under GST because its cost will be high. So friends, we have challenges under GST also, but this model we have adopted, it is not free from the flaws. Why I am saying so? Because it was difficult to estimate. First point was that I told you that in the states were worried about their losses, revenue losses. So at that point of time, states were not agreeing to the GST because they were losing their revenue. But later on, with some compensation, with some adjustments, they agreed to that. And today, though we have GST, but still states are not getting revenue to the mark they were expecting it. Because when I said it is it's a consumption-based tax, and consumption is purely dependent on the population size of the state. But if you compare the population size and the collection of GST, there is a huge gap. There is a huge gap. So there is a need to understand why. We need to understand the reasons for that, why it is so. The multiple rate tax structure is still there, as I told you. In VAT regime or in pre-GST regime, we are having number of rates state-wise. Even today, though we have uniformed many rates, but still we have slabs of 3%, 5%, 12%, 18%, 28% like this. So we have to reduce these slabs further. But because of some or other reasons, we are increasing the slabs. Then friends, as I told you that in India, Constitution gives powers to the state government and the central government for taxing the products, taxing the goods and services. So we were not having some of the provisions under Constitution that governments should or government can tax goods or the services. For example, state governments were not empowered to tax services. There was no provision under our Constitution that states should be in a position to charge service tax on the services. So Constitution amendment was required, which was done, and now under GST, states are empowered to tax on services so that they can get their state GST. So amendments took place in Constitution to bring the GST. IT structure was another issue with the GST because we have different states, then central government, then role of RBI, finance ministry, like this. So the IT, though it is there in place now, but during 17, 18, 18, 19, we faced a lot of problems from this IT structure because after introduction of GST, it was changed, it was amended many times. So every amendment need to be accordingly amended in IT part, which was not easy for the IT people to comply with the changing of the law. So IT part means GSTN part or the GST portal was not working properly. There was gaps in the reports. So this was a big challenge and still it is going on. Then cooperation among the states still going on and they are not up to the mark. Unorganized sector, how to plug the transactions being undertaken by unplugged, this unorganized sector is another challenge for GST. Non-manufacturing sector, agriculture sector especially, how to deal with this is another challenge for them. Similarly, friends, for small traders, in pre-GST regimes, for small traders were supposed to deal with state government only. They were having nothing to do with central government. But after GST, now they are supposed to deal with state government as well as central government. So it is there some sort of cost enhancement and also responsibility or the response to the central government they are supposed to. They are accountable to central government also now. Earlier they were only to the state government. So these are the things which are being faced by stakeholders or the policymakers under GST, and we need to improve upon for all these issues. Another issues with GST that we have adopted, that cascading effects means tax on tax are not completely gone yet. Not completely gone, because I told you that products like real estate or petroleum products, liquor for human consumption, they are kept outside the purview of GST, and because of that cascading effect of taxes are still there. Slabs for GST rates are also rather increasing, whereas we were of the view that we will reduce the rates slabs. There are cases, friends, where on inputs my GST rate is higher and my rate on outputs are lower. So there is a gap in value addition when we are charging GST, which is creating problem for industry, the stakeholders. Frequent changes in law, as I told you, it is another shortcoming of the GST. Till after 7 years of implementation of GST, we are regularly changing GST for this or that reasons. Because of frequent changes, IT portal is also facing a lot of problems. It's not easy to work on that. There's a gap in the reports. So shortcomings are there, and we are expecting that in the time to come, GST will be a flawless, effective, and free from all the flaws. Friends, when GST came, this was a challenge for everyone. What should be the rate if we want one rate? So with some methodology mechanism, economists try to have one revenue neutral rate, and it was 15% to 15.5%. This single rate was sufficient to have economy at line. But country like India, it is not possible that every product can be taxed at the same rate. Means small item of any particular product, let's take example of flour, wheat flour. If it is taxed at 15% of rate, then it will be harsh for the poor people like daily wager and on. So there was a need of identifying the products which are need of the base, which is a basic need for every individual, and some of the luxury products. So accordingly, products and services were distributed, categorized, and slabs like 5%, 12%, 18%, 28% were brought into. And today we are having these basic slabs of 5%, 12%, 18%, 28% under GST. And apart from that, we also have rate slab of 3% on gold and all. And upper limit can be 40%, which is not there right now, because as per law permits government to have GST rate up to 40%. But right now the highest slab is 28% only. So items of luxury nature like car and soft drinks and all are covered by the slab of 28%. Rest of the products are covered by 5%, 12% and 18%. So this is a tax structure that we have kept for GST, and also keeping in mind the revenue for state as well as for the central government, because ultimately the indirect tax, the main objective is to collect revenue for the government, and government collect revenue by imposing taxes. So as I told you that income tax, people are paying income tax on their incomes, and in GST every person, means if the country has population of 140 plus crore, everyone is, even a person, even a 1 month infant is also paying tax under GST. So friends, we all know Chanakya, and Chanakya always said, king must collect taxes like honey bee. It should be enough to sustain but not too much to destroy. So this should be the policy, this should be the theme, this should be the target of our policymakers, that tax must be collected, but it should not be harsh. It should not be harsh for anyone.